So if you're watching this video, you've probably been hearing about the awesome benefits of multifamily investing, which is really cool. Maybe you have family, friends, or coworkers who have had great success, or you heard some podcast or read a book and you decided you want a piece of the multifamily pie also. Now before you dive in head first though, I want to make sure that you avoid some of the very common mistakes that I see newbie investors make. Let's do this. Well, hi there, I'm Michael Blank. I teach people how to become financially free with real estate by investing in apartment buildings. We post videos every week, so make sure you subscribe so you don't miss a thing. Look, now every time you enter into a new investment vehicle, it's important that you do your research so you fully understand the risks involved. The great thing about multifamily investing is that the risks are generally lower and the reward greater than other investments that you could make, like the stock market, for example. But there's still a possibility you might get in your own way. Now, if you're thinking about getting into multifamily investing as a passive investor, check out these 5 newbie mistakes to avoid. Now, I've been in the real estate and multifamily game for a long time as both an active and passive investor. When it comes to multifamily investing, I've done a lot, I've seen a lot, I've learned a lot from my mistakes and mistakes of others. Now, the first mistake that I see with a newbie investor is this: they don't have a why. In other words, they don't have a mission for their money. Now, why is it so important to have a why? Well, making money is a lousy reason to do anything. If you don't have a real reason for investing beyond making money, your money won't accomplish much for you as well. So before you jump into investing into multifamily investing, or really anything, okay, you really need to set goals for your money and have a strong why. Maybe you want to start a family or give more money to charity, or like me, achieve financial freedom so you have less stress, you control your time, you can do whatever you want. Your why will help you get clear on the amount of money you need to make you achieve your greater goals. Okay, in turn, this will help you make better decisions about where to invest because it creates great clarity. All right, moving on. Newbie mistakes number 2, 3, and 4 are also unavoidable, that they are truly cringeworthy. So stick around to find out what they are. All right, here's some of those cringeworthy mistakes I see newbie investors make that are all related to entering into a deal. Let's start with number 2. Not doing your own research. There are tons of benefits and upsides of putting your money into multifamily, but there are cons too. I actually created a video on some of the cons of investing, so check that out as well so you can avoid some of those mistakes. Now, as an investor, it's up to you to know the ins and outs of any investment you make. And the truth is, multifamily might not be the right investment vehicle for you. Just because you heard from me and others, or you read a book or a podcast about all these mailbox money things, it doesn't mean that it's the best for you to invest your money in. Now, you've got to educate yourself so you can be confident in pulling the trigger on a deal when the opportunity presents itself. Now, on the flip side, I've seen plenty of people make newbie mistake number 3, which is waiting for the perfect time to invest in a deal. Now, here's the thing. The best time to invest in your money is, of course, today or 20 years ago, right? And it is important to educate yourself, but honestly, it's really never a good time to invest, right? Before COVID, the market was too hot. Maybe I should wait. We're on a bubble. Now all of a sudden we're in COVID, oh my gosh, now we're in a recession, maybe we're headed into recession. So really, bottom line is it's really never a good time to invest from that perspective. Now there's another thing called inflation that is eating away at the value of your hard-earned dollar every single year. You know I love spreadsheets, right? Inflation is something I take into consideration for every single investment, right? The Fed targets 2 to 2.5% of inflation every single year. They call this growth. And what it's doing is it takes 2.5% away from your earnings, from your stock returns, and it's eating into that. And with multifamily, you actually have a hedge against that. I'll talk about that some other time. Take into consideration that your money sitting in a bank isn't doing much for you to achieve your greater life goals, or anything you have in stocks and bonds, really. So, but on the other hand, you don't want to go rushing into the wrong deal, which is number 4 on my list of newbie mistakes. Now, this rapid rushing into a deal usually happens when someone has turned on to multifamily investing through their network of friends, family, or colleagues, or someone they met somewhere, and this person has been given the opportunity to invest alongside people that they know, like, and trust. So they rush into the deal to secure their seat at the table because these things always subscribe in a day or two. What could possibly go wrong? Like, even if people you trust are putting their money into a deal, does not mean a deal is right for you. So please, do your own due diligence before you jump in. This brings me to the final mistake to avoid as a newbie investor. Number 5, not building an investor network. Now, I strongly encourage you to seek out other investors and build a network. Not only will you learn from them, but you never know what opportunities may arise from those connections. In fact, I've heard of several investor groups being formed through connections made at my annual multifamily event called Dealmaker Live. So check that out. It's usually in the summer, or even we have passive investors joining our Dealmaker Mastermind community because it's a community of mostly active but also some passive investors who are looking to partner with active investors. The point is getting connected with other investors really helps support you and vetting operators and doing deals and getting yourself into the right deal. So make sure you surround yourself with people who share the same interest, and you can meet them at Dealmaker Live, you can meet them at Dealmaker Mastermind in our community, but we also have a free Facebook group as well that you can join to get support. All right, avoiding newbie mistakes starts with taking the time to really think about the impact you want to make in your life, your why. Knowing your why will put you well on your way to making successful investment decisions that are along your goals and your values. It's also important to balance education and opportunity. You have to know when to pull the trigger, and you only do that by having confidence in your knowledge of the investment that you're investing in. As I say, success happens when preparation meets opportunity. So are you ready? Now, why are more and more investors shying away from single-family homes investing and shifting their dollars to multifamily properties? Find out in my next video. I'm Michael Blank. Catch you next time.